Thanks again for joining us on Don't Go Uncovered. We're here. Basically, we're going to go through the basics today.
What's up, Rob?
How you doing, Mark? Good to see you again.
Good to see you.
So we've talked about doing this episode for a long time.
Yep.
Basically, 101 basics of questions we get all the time. We know hundreds of agents that work with us and thousands of conversations and phone calls every week. What are some? I've got some terms I want to throw at you, but just in general, give me kind of your take on what are people asking about all the time.
There's some basics, and that's why we're even having this conversation, and we're going to go through them because it's really just not having someone in their corner, right? It's like not making sure, you don't have an attorney if you're going to court, if you're going, you're not feeling well, you got to go to a doctor, you don't want to go to the veterinarian,
right?
You have to have a professional that works with you that you can trust. And that's the difference. And that's why these people get these questions, and then they get with us at Don't Go Uncovered, and then, we have a point of contact for them ongoing. So let's go through. Let's talk about some of these things. So people are searching
for answers millions of times a day across the country. We're not just talking about Florida anymore.
So we're talking about like Google searches here. Are we talking about like
YouTube searches as well?
Stuff that we've talked about.
The popular search engines, this is where people go first for everything. We know that, right?
Yes.
That's where they go first for everything. So they're hearing this terminology, and they're just trying, I think, get a basic understanding of, I'm going to get on the phone. This is going to help me ask the right questions.
Gotcha.
I think that's where I'm going with this. So there's three that are the top that come up all the time. People want to understand the difference between premiums, deductibles, and copays. Might be a weird way to phrase it, but it's out there.
So let's unwrap it. Premiums are the amount of money that you are going to pay every single month. Right?
That's my monthly bill.
That's it. What is a premium? That is my monthly bill, whatever it may be.
Just look my auto insurance.
That's it. Now, the next one was copay.
Copay.
Copay is a set dollar amount that you are going to pay when you go to a doctor or a service. Now, not all policies have copays, but if you have a policy that has a copay, say it's $10 to go see your primary care doctor, that's it. You pay your $10 and you're done.
Yeah. And deductible's the last one. And that reaches across all types of insurance. If you want to maybe speak about that a little bit. That's always that's really the number one question when you get to here's your price per month. What's my deductible going to really be and when I have to use this policy?
Right. So a deductible is a set dollar amount that you must reach before certain parts of your policy will start working. Okay, now you've got a deductible on your homeowner's policy.
Sure.
Do you ever call your insurance agent and have them explain it to you?
I don't think anybody does.
Well, we want you to.
Right.
Right. So we explain it to you how you're going to apply money to that deductible and then how that's going to work for you throughout the year.
Okay.
Because that's really important, especially if you're changing insurance policies. What happens to my deductible when I change my insurance policy? And in certain cases, you might lose it. So you got to be careful.
Yeah. Okay. Understood. And then out-of-pocket maximum.
Great number. This is a number that no one wants to hit. Your out-of-pocket maximum is the most amount of money that you and your family collectively will pay during any one calendar year. And out-of-pocket maximums include all of our prescription drugs.
Okay.
All of literally when you're paying out-of-pocket for covered medical expenses, that's applying to that out-of-pocket maximum.
Okay. So that's something, again, you don't want to reach, but if you do, your coverage really kicks in.
That is there for your protection.
Yeah.
If you come out of pocket, say $5,000 or $3,000 for the entire year, then you are no longer financially responsible for paying any of those medical bills. The insurance company is now paying 100% of your medications, of your doctor visits. And if you've hit that, we've had people who have hit their max out of pocket.
I know.
They still get bills.
Yeah.
And they pay them. Right. We've had a Medicare customer of ours that was out of network, and he was like, "Oh, well, I'm out of network," and he had reached all of his out of network and in network out of pocket expenses, and he should not have been getting bills.
Right.
So, but you got to call, you got to talk to an agent. We're in your corner.
Right. So those are just kind of a basic understanding. People don't need to have a deep knowledge of these things when they have us on their side.
Definitely not.
A couple of others that keep coming up, and maybe this goes a little bit back to the coinsurance, but. I think that a lot of people are asking about did we talk about the copay versus a coinsurance?
No, absolutely not. No. So coinsurance is what we call a share of cost, right? So you might hear these terms 80-20, 50-50, right? And that's the share of cost. So there's a lot of plans that don't have copays, but they have this thing called coinsurance. And that coinsurance is the amount of shared of cost that you are going to have with the insurance company. So let's just say I've got a $100 deductible, right? And then I have a share of cost after that $100 deductible of 80/20. After I pay $100 and that deductible is satisfied, all of my bills I'm only going to pay 20% for.
Forever.
So every
for the rest of the year.
For the rest of the year. And then if I hit my out-of-pocket maximum, it moves up to 100%.
Okay. So it's full, complete, comprehensive coverage. No matter what happens to you.
Well, yeah, but I mean, the coinsurance can be confusing.
Yes.
That's the thing. And a lot of people's like, I don't get it. When am I using it? When does it apply? You know, that's where we understand it and we talk
right.
through it.
And different plans have different structures.
Correct.
Okay.
Absolutely. 50/50, 80/20,
right.
90/10.
They're kind of all over the place.
Yeah, and that's affordability factors, trying to find the plan that works for you and your family.
Okay. And so these are really all the key factors
when
we're talking to somebody about the plan that's right for them. HMO versus PPO, this is something that I've heard you say is very important to educate people on and really talk them through and walk them through. What are kind of the basics there?
HMO is, and this is a huge topic, HMO versus PPO. And HMO, the way I like to describe it, is a quarterback approach to medicine. And what that means is you've got a primary care doctor that's directing all of your specialty care. So he's going to make sure he's pulling in the specialist for your heart or whoever you need to go to. Whereas a PPO, you don't have that quarterback. But most people, they're going to have a primary care doctor. They treat a PPO like an HMO, but they're like, oh, I don't want to get a referral. Because on an HMO, you're going to get a referral.
Right.
PPO, you don't need a referral. But you also don't have everybody really, one person monitoring your care.
Right.
Flexibility.
And why do people think that the referral is such a tough process? It seems to have a negative spin to it.
I think it's just other people's experiences.
Okay.
It's a very busy system, the medical system.
Of course.
Things get lost, and it's always the big bad insurance company's fault. But the doctor may not have filled out a form right, or it didn't get inputted into the system.
And I don't get the appointment that I'm looking for.
Which is, you have to have someone that could be there and be in your corner.
Right.
But the PPO versus HMO. Go back to that real quick. PPO is going to be flexible, right? You can go to typically a bigger group of physicians and doctors, but it's going to be at a higher cost.
Right.
For the HMO, all of your copays are typically going to be less expensive because of those controls that are in there staying
more
within
overall
network.
Managed.
Yeah, you have to stay within network unless it's an emergency.
Okay. And a couple other things that continually come up. We get a lot of people that are self-employed or I lost my job. I don't know what to do next. COBRA questions, things like that. So moreover, we're talking to people. Is there someone's coming off group? Is there something you see frequently coming from the self-employed or maybe recently lost their job?
Did you lose your job is a big one,
okay.
Right? If you lost your job recently, you've got to call. You have a lot of options. Depending on how many people that was in the business, you may have a COBRA option. So there's an SEP that you also have. So now you can enroll in a plan, and that plan can start the first of the month coming up. But if you've lost your job, we want to talk to you. We want to make sure that you know what your options are. And that way you can make a good decision.
And hopefully it's temporary. You lost your job. And then, we have plans that can fit that need as well, correct?
Temporary coverage if your kids are going to school or going to college or in between jobs. So let's just say you lose your job and you're like, okay, I'm going to be on the hunt. I should have another job in 3 or 4 months.
Right.
We have temporary solutions or we have longer terms.
Okay.
Let's just say you want to change. If you lost your job, maybe you want to start something that you've always been wanting to do, right? And I want to start a podcast, or I want to, I want to start driving for, Uber or Lyft.
Professional golf.
Oh, there you go. Now, if you can cut it, which is unrealistic,
senior tour,
go back to work.
Yeah.
But yes, you can do. A lot of self-employed people will just get a qualified health plan instead of group
insurance. Just go right for the Affordable Care Act policies.
Absolutely.
Okay, and we can help them with that.
Yep.
And that's really our bread and butter. When we kind of walk through, so all the plans have the 10 essential health benefits.
Yep.
And if we talk, it's a lot of definitions to go through. I think we can go through it pretty quick. If you maybe want to comment, I know some of the ones that stick out to me. The mental health and substance abuse coverage. What does that look like?
Well, first, let's just hit it. What are the 10 essential benefits that you got? Just
ambulatory services.
Okay, yep.
Emergency services. Hospitalization, maternity, pregnancy, and newborn care. You're going to have to explain that one a little bit. It sounds very detailed. Mental health and substance, prescription drugs, rehab and habilitative services, lab services, wellness and preventative care. I want to talk about that. I've got some stats for you. And pediatric services is the 10th.
Okay. So some things that you also have to understand in all of our qualified health plans, you are going to have unlimited annual and lifetime benefits. And that's probably one of the biggest things that you have to understand, because that insurance company, they are going to pay an open checkbook for your health. If, God forbid, you were, diagnosed with cancer, you had leukemia and something going on that, you needed ongoing care, and that was millions and millions of dollars, the insurance company has to cover you. All part of that essential benefit program. So which ones are the ones that confuse you the most? The maternity, is that what I heard?
Well, I mean, maternity, pregnancy, and newborn care. That means if I have a child and my policy started in January, I have a child in June, automatic coverage for the newborn baby?
Well, you will be added to your policy,
okay,
but it is going to be automatically covered no matter health situation, but that's always been that way.
Right.
So that will continue to be. But what they do is include maternity benefits on everybody's policy, whether you're, breeding, going to be breeding, or you have no intention of breeding.
Right. It's on the policy.
It's baked in there.
Yeah. So, I mean, there's a couple, obviously, and then I know everybody always has questions about what drugs are covered. What's my prescription plan look like within my policy? And how do we select and choose and help kind of guide?
So we have this thing called a formulary. It's just a list of all of the medications. It's online, and we just search all of them. I mean, it's as simple as that. Each insurance carrier covers pretty much, similar medications, but basically we just do a lookup on them.
Okay.
And really, the plan that you choose is going to dictate how those drugs are covered from a cost perspective. Because if you're buying a plan that doesn't have any of those copays, then you may not get any copays on that plan, for those meds. So we pick that plan so you get the copays for your drugs.
I gotcha. Okay. So that's a positive value added. That's a benefit to the member.
Absolutely.
On the policy.
Yeah,
okay.
Absolutely.
And the other kind of basics, and I think people are beginning to understand this more, that the elimination of pre-existing conditions.
That's
right?
huge.
I mean, that passed in the bill in 2012 and never has been touched. And it really was kind of the big change in the market, I think. Got all those people that they were getting denied. I mean,
yes. Yeah, there was no solution for those individuals. So, guaranteed issue policy with no exclusions on pre-existing condition coverage. That's what it's all about. I mean, that is the Affordable Care Act. It's just not affordable anymore, right? For a lot of people, it's gotten out of control. But at the same time, all of these essential benefits, all of the coverage that you get, as well as unlimited benefits and all of these, we can go through it again, but they're expensive, right?
Yeah.
They're providing a lot of coverage to folks. So it's automatically going to get increased in cost, right? I mean, there's no other way. The math just doesn't work any other way.
And costs don't go down.
Never.
They just continually go up. And
correct.
Earlier we were talking about pretty big numbers when it came to the tax subsidies when we were looking up average incomes, and we looked across the state of Florida.
Yeah.
But it really does apply to probably 4 out of 5 people watching us right now are going to qualify for, get these questions answered for them first, obviously. Make sure they understand the policy that they're buying, but that we really can help 4 out of 5 people. We say it all the time because it's true. Really get a low or no cost plan that has all this in it, all the basics we're talking about, right?
Yeah, the basics are always going to be included in any plan that you buy on a marketplace plan.
Okay.
And then we have other plans that are available for people that may not want all of these essential benefits. They may just say, I don't need it.
Right.
I want more of an umbrella, right? I just want something to give me a little bit of catastrophic protection. We have those kind of policies as well.
What does that look like, a plan like that? Say I come to you today and I go, I just want the minimum basics I can get. If I get into a car accident or I get diagnosed with a chronic disease, I want to make sure I have the umbrella type coverage.
Absolutely. So those are higher deductible plans.
Okay.
Typically, those are going to be short in duration. So that way, if you had an ongoing problem, something you're going to want to end up switching to some sort of marketplace plan. But it's that umbrella. And then really, those plans are going to have deductibles of $10,000 to $25,000, but they're going to be much lower cost because you're taking on all the financial responsibility up to that $25,000 situation.
Does that fit more of a younger demographic, or does it?
No, I think it's more to a more affluent individual
Okay.
who's not going to get help on the marketplace, right?
Yeah.
You know, that's that single individual making over $80,000-$100,000 a year may just want, you know, younger folks that are still be active,
Right.
Because we have accident protection in there. So if you go skiing, if you're, you know, going mountain climbing, whatever you're doing, you're still protected. So that way you're not exposed to that big $25,000 bill.
Yeah, and I think that's key too that you bring that up, because it's a question I saw when we were enrolling this year at our company. What is your lifestyle? How are you a risk taker?
You are not a risk taker.
Do you just sit on the passenger side of a golf cart? That's what I checked. But when you're talking to people that are outdoors people and people that are boating and fishing and all these types of things, they need to take that into consideration. An accident type plan, the right coverage.
Oh, well,
a race car driver.
I love that.
Amateur race car driver.
Amateur. Yes, if you're not, yes, but you can't. Yes. So it's always funny. We always make a joke around the office. Do you know what the most dangerous sport that you can play is? Especially here in Florida, we play it a lot. You don't even think of it.
What is it?
Fishing.
It's fishing.
Fishing. I mean, you think about it.
I can see it.
So most accident-related injuries, emergency room visits, so I heard this statistic, and I was like, okay, really? But then you start unpacking it. You're drinking, so you're on the boat,
right?
And then you're playing with sharp objects.
All the factors.
You've got and you've got the hooks. But yes, so we make sure that people are protected for all those kind of things.
So that and
fishing
and
you don't
and
fish.
How many people get injured in the kitchen cooking?
Oh yeah,
especially
around the holidays.
Yes, absolutely.
You're distracted.
No question. Very distracted. All the family, the gifts, and the booze, and accidents can happen.
Accidents happen.
So yeah, I mean, I think that can you. The basics, I think we've covered pretty well.
Hopefully, I mean, look. I don't remember if there's. I mean, really, just like, can I see my doctor? You hit the nail on the head. You know, the copays, the deductibles, the coinsurance. What do these terms mean? The in and out of network. You know, we take you through that, how that works. So, I mean, these are all terms that we have solutions for make sure you have a good understanding.
And we can get through it pretty quick, too.
Yeah, totally.
I mean, this is not, we're just trying to basically cover all the bases here, just to build a level of trust and get people more aware.
Correct.
The other thing we have to make you aware of is the deadline.
Oh, yeah.
Because this all goes to the side after the end of, for a January 1 effective date on December 31st.
Well, December
midnight.
15th. So December 15th is the close of phase 1 of open enrollment for a January 1st effective date. And then we have until 2/1. We have 1/1 and 2/1 effective dates. So they'll have until January 15th after that. But after December the 15th, they're no longer hitting 1/1. So now that decision is for 2/1.
Right. Because we talk about all these great benefits. We talk about the fact that there's zero premium plans still available, low cost options. But it's just so critical and important to let people know that the deadline for next year is December 15th. And then we've only got one more after that, but really, why not get your plan started on the first of the year?
Please call us today. December 15th is the end all, is really what you need to be thinking about. There's going to be changes in the future because of governmental changes, but we'll talk about that another time.
Well, give us a call today. Definitely before December 15th. It's easy to get in touch with us and comment uncovered in the comments section, and we'll be sure to get in touch with you, keep you informed, and check back in with us.
Thank you.